you got to have a strong understanding when it comes to multi-state tax work that the resident state has the primary ability to tax the income. So like, let's take, for example, California, which the Franchise Tax Board is known to be a pretty good at collecting taxes. They're pretty aggressive when they don't get paid. So if you're a California resident, all of your income as a resident is subject to California income tax, regardless of if your rental property is in Nevada or it's in Arizona or Tennessee, which is a lot of places that people in California have bought property, right? Because they may have appreciated property in California, they borrow against that, and then they purchase cash another property in a lower cost area. So you don't really, in most cases, your tax obligation, Tiffany, will be to the state where you live, even if your income's coming from out of state. However, you still are going to have a reporting requirement in the other state. So you still would have to do, say, a Tennessee tax return, just reporting the rental property, and it would be a non-resident tax return. So you can check with different states, you guys, check the gross income filing requirement for that state. And in most rental property cases, it's going to be over, like whatever rents the person's getting from the property is going to be over the filing requirement limit. So you file a non-resident tax return, Tiffany, on the state where the property is, and this is for California resident again. Then you actually pay you would claim the other state tax credit for any tax that was paid to another state. So let's say certain states, they actually make you pay income tax in that state if you hold rental property there. So in that case, you wouldn't get double charged by California as long as you do the other state tax credit. So let me type that in the chat box here. Okay, there's a tax credit, right, you guys, on the California return, and other states have this same other state tax credit where you need to, whatever income tax is paid on the out-of-state income, if that state requires it, you can gather back a credit on the California return to prevent being taxed by two states. So this is actually a very tricky area and actually depends on what state you're talking about. So I'm not really going to be able to give you like kind of like the easy short answer, but definitely it's something where you want to prevent double taxation, check the filing requirement laws and the other state laws regarding state tax income,